and interesting also. We want to move into Unit 3. Unit 3 speaking to confidentiality and conflict of interest. Confidentiality and conflict of interest. So the sections we'll be looking at in this unit speaks to the first section on the basic principle of confidentiality, the basic principle. And we'll look at recognized exceptions to the duty of confidentiality, which is section 2. And section 3, talking about improper use of information, client information we gather during our professional work, the improper use of such information. Then the fourth section will be looking at confidentiality of working papers, and also the fifth and final section under Unit 3 will be looking at conflict of interest. Conflict of interest. So let's run. What's the basic principle of confidentiality and conflict of interest? The basic principle speaks to we as accountants not disclosing information unless legally permitted, unless we are giving consent by the client or we are legally required to do that. So disclosing information during professional work or after is prohibited for chartered accountants, for auditors in practice. So unless we are legally permitted or with the consent of our clients, or where we are legally required, or we have this professional duty and right, we are not allowed to divulge information or use information during our professional work. This is very important. You need to take note of that, as our professional duties must be done with utmost integrity. Utmost integrity. Very, very important. So take note of that. These are the only areas where we are allowed to divulge information during our audit practice. Please take note of that. So every information we gather during our professional duty, we are supposed to ensure that we keep it to ourselves. We are privy to such information, intricate information for our clients and those we meet during businesses. We have to be careful how we handle such information. This is very important. So speaking to the fact that we are not to disclose information unless, number one, legally permitted. What does it mean to be legally permitted with consent? The client gives you written approval to share it. That's what it means. So a client can give you written approval to share it. So for example, a client authorizes you to send their financial data to a bank to support a loan. So for a professional accountant, you can do that, but not for auditors. So your client cannot send an auditor. A client cannot send an auditor, but as an accountant, you can do that. And also, we are legally required. The law, karma, money laundering, and other laws or regulation can mandate us to disclose. So, for example, reporting suspicious transactions under money laundering laws to the authorities. So that's the situation where we are legally required to disclose. We have this mandatory responsibility to disclose. And number 3, the professional duty or right. Our professional rules or professional standards require it, and it is not prohibited by law. So where our rule or our professional conduct requires us, we could do that, and if it's not prohibited by law. So for example, disclosing audit findings to a regulator during a quality control review, where such disclosure is allowed under the law. So in short, if you can't reveal client information just because you feel it's useful or someone asks, you need a valid legal or professional basis to do that. This is very important. And that's what speaks to the basic principle of confidentiality. Very important. So that's a brief explanation of that. And like it's our custom, please feel free to ask any questions, raise your hands. And if you have any concerns, please freely raise your hands and interject, and let's clarify whatever concerns you have. All right, so we're done with section 1, and we'll be very fast. We're taking so much time on chapter 3. We need to run so that we can start speaking to question and answer. Very important. All right, so let's look at the second section, recognized exceptions to the duty of confidentiality. What are those recognized exceptions? What are those recognized exceptions in performing our duty of confidentiality? This is very important. So, in speaking to this section, disclosure is permitted by law and authorized by a client or the employer. Very important. So, we've spoken to that in the basic principle. And also, disclosure is also required by law. For example, during legal proceedings, money laundering reporting suspicion is enough for disclosure of this information. So you are not bound by the confidentiality or disclosure of information of your client under these exceptions. So our professional duty also, or right to disclose, for example, like we said, the quality control review, regulatory inquiry, or protecting professional interests also allows us to disclose or divulge information. Other considerations could include access harm to parties to ensure information is substantiated, appropriate recipients of communication, and also we need to seek advice if we are not sure of this area. So there are other areas or other issues where we need to divulge information, or we may be mandated to divulge information. And these areas include where there is harm, potential or actual harm to someone or to a party. It's very important. So access harm to parties, if you think about where disclosure could unfairly damage the client, third parties or public interest. Then in areas of ensuring information is substantiated, you need to be sure and disclosing information like reporting money laundering activities where you, in quotes, are suspecting the client. It's a situation where you want to substantiate it, that you are triggering an investigation to take place by that report and is appropriate. After the investigation is provided or done, then you could substantiate your doubts. And where you have issues with disclosing information, you have barristers, solicitors, please seek legal advice. And you also have our professional network. That's why once you qualify as a chartered accountant, it's not advisable to stay alone or in silo. Don't stay alone. Please register with the closest district society. ICAN district society are fastly expanding. They are spreading like wildfire everywhere. The last dispensation or presidential tenure expanded, and they've opened a lot of districts. In Kano, we used to have just one. Now we have two spread across Jigawa. So wherever you are in Lagos, multiples, Abuja, multiple district society. What are you doing? You are professionally networking. And somebody said, or a wise person said, your network determines your net worth. I seem to agree with that, because once you are networking with these people, you begin to get value by these interactions, questions, and rubbing of minds. Our little minds, we rub our little minds with sharper minds to help us glean on how to address issues professionally, and our learning curve shifts. We experience a shift in our learning curve. So take note of that. So once you qualify, don't just say, I have the certification, I don't need. Please register with the district. aside seeking advice from baristas, solicitors, or legal practitioners, you could also get advice from seasoned chartered accountants, experienced ones in the field, on issues permitting around what we are discussing today. It's very important. So please take note of that, and you really get some value if you do that. So that's my advice to you. Okay, so that's the end of this second section on the recognized exceptions to the duty of confidentiality. So like I said, feel free to interject if you need any clarifications or observations, or you also have some comments we could learn from your points. Okay, so let's look at section 3, the improper use of information. The improper use of information. As a member, we should not use or appear to use confidential information we gain from the course of our professional work for our personal advantage or the advantage of anybody close to us or a third party. So look at the ICAN member now. It's not stated whether it's an associate or a fellow or a student, all ICAN members. So as you are on this call, you're also a member, irrespective of the category. So we are all bound by this, would I say decree now, or code or act, that we are not to divulge or use or appear to use confidential information gained in the course of our professional work for our advantage or to the advantage of a third party. Please take note of this. It's very important, because any member, whether a student, whether an associate, whether a fellow or a registered accountant, whoever it is, it's that commits this, it's a crime under the ICAN Code of Conduct, and you are found guilty, you will face the wrath of ICAN. So we are not to use confidential information for our personal advantage, like insider dealing. You're doing an audit, for example, and you're about to sell shares at a discounted rate. You had it, maybe to shareholders, and you called one of your favorite shareholders that is your friend. That's divulging of information. It's insider dealing, and it's not appropriate for chartered accountants to engage in that. So many other scenarios that speak to the use of confidential information and using it inappropriately. This should be frowned at. So let's take note of that. And it's very important that the improper use of information must not be found among ICAN members. All of us ICAN members. Please take note of that. All right. So speaking to confidentiality of working papers. Speaking to confidentiality of working papers. Confidentiality of working papers is important because an accountant or an auditor has access to this information, and the property of the accountant should not be normally outside the available work of duties or jobs you are doing. So these papers should not be made also available to outside parties, whether electronic, whether paper-based. They must be confidential. And that's why lately, as most work processes are digitized, there are a lot of encryption that goes on. So whatever you do with a laptop of an organization, maybe you're in an audit firm or you're an accountant in business, most information are encrypted, and they also upload on OneDrive. If you heard of OneDrive before, it's a Microsoft 365 package that whatever you do on that laptop automatically saves on OneDrive. So even if you are leaving the organization, that information does not belong to you. It belongs to the organization or the firm you are working with. So digitization and the current tech-savvy resources we have at our disposal doing our jobs has made it a bit easier to be confidential. So except maybe you have a hard drive or an external device to take those information, you may not be able to do that. Most organizations, they even lock their USB. The IT units lock the USB ports. So whatever you do on that laptop, if you are leaving, you leave the laptop. So the information belongs to the organization. So that's how we're supposed to be confidential, actually. Confidential. So currently I work with a laptop and it's not mine. So when I'm leaving, I just give them the laptop. So no personal information or whatever it is I'm going with. So that's how, or a prototype or a picture of how we're supposed to be confidential with the information of that organization or our client we are working with. So you're not supposed to divulge, because that information is not supposed to be provided to outside parties or unauthorized parties without approval. So it's very important an accountant take notes of this. And situations where may arise, the government or agencies, tax authorities ask to see these working papers relating to that particular client. Such situations should be that you're acting in the best interest of the client. So if as an auditor or an accountant, you feel that releasing those papers is in the best interest of the clients and the client did not object to this, then the papers should be made available. So ultimately, like tax authorities are likely to have legislative powers to obtain those papers or those documents, and any lack of cooperation from us as auditors or accountants or his clients may add to existing suspicion or deterring the tax guys, the authorities to do their job. So where you have issues like this, discuss with the client, and where you are allowed to divulge, please divulge. And where you are not, you advise the client in their best interest to do that, so they don't raise suspicions of maybe hiding information from the authorities. So the property of the accountant generally is not for outside parties. So act in the best interest of your client. When authorities ask for access, get approval from your client and provide. And where approval is not given, tell them or advise them otherwise that we need to provide this information. And very few, except maybe shady deals, are done. But most authorities that want to comply, especially the compliance area, would really ask you to divulge, to provide those information. So it's key we take note of that. So confidentiality of working papers is very important. We need to take note of what we do, whether working papers paper-based or working papers digital. Most times we have digital working papers where you could move them with hard drives, but please be very careful with how you divulge information. Take note of that. Okay, so if we don't have any questions or contributions or any concerns, let's speak to conflict of interest. Conflict of interest. Conflict of interest between members and clients, speaking to acceptance of engagement. If a reasonable third party will see a conflict affecting their judgment, should not come by. What does this mean? So members and clients, speaking to auditors especially, where an auditor is leaving an engagement and an incoming one is coming, he needs to contact the succeeding auditor. He needs to contact the outgoing auditor, not succeeding auditor. The incoming auditor should contact the outgoing auditor. We know this. So to avoid conflict of interest and other issues that may permit around the engagement. So contact him, get to know why. Is he resigning due to issues he found? Is he resigning due to tenure expiration? What's the reason behind the exit of the former editor? So we shouldn't have conflicts. And where auditors are bidding for a job and one firm is giving the job, there should be a conflict between the client, between member accountants or member firms. It's very important we take note of this, and conflict affecting our judgment could arise if it starts with members. So adequate safeguards, like we need to review relationships between clients and auditors. Also consider conflicts when taking on clients. That's why you need to engage or communicate with the outgoing auditor. Also to notify clients, speaking to Chinese walls, that is walls that cause conflict. And also safeguards could be resignation. So Chinese walls are like safeguard in the sense that you put them between you and the client. To ensure that the conflicts don't affect the job and it doesn't affect the outgoing auditor, especially after the job has been done and you have taken the job. This is very important. So take note of that, because most auditors in practice have these issues. We need to ensure that these adequate safeguards are in place to ensure that challenges around auditing and taking new jobs, safeguards are employed, because if we don't do that, we find out that we have issues. So speaking to that Chinese wall, you see that essentially it speaks to information barrier, and it's an internal safeguard that separates teams, departments, or individuals within the same firm to prevent confidential or sensitive information being shared inappropriately. So these safeguards speak to helping us understand how to not provide. Okay, thanks. I saw somebody. Yeah, sorry, Keller. Apologies. I just saw your hand now. Please go ahead. Interject freely. Sorry, Keller. Go ahead, please.
Yeah, good evening, sir.
Yeah, good evening and nice to have you. Yeah, we can hear you. Please go ahead and speak.
Hello?
Yes, we can hear you. We can hear you, Keller. Please go ahead.
Okay.
Yes.
Yeah. I just wanted to confirm the succeeding auditor trying to make some findings from the outgoing auditor, and then in this process, it's possible that some information, can be divulged by the outgoing auditor. Is this classified as one of the exceptions where
No.
the issue of confidentiality? Okay.
No, because divulging information is very important for professional colleagues. So we are insiders. We're professional colleagues, so there shouldn't be any hidden information or whatever. So that exception, there's no, and that's even why one of the reasons why you need to communicate with the outgoing auditor so that you can get information. There's no confidentiality there. You are two professional colleagues. You are both bound by the duty of confidentiality. So you need to divulge information, share knowledge. Yeah. So two professional firms, there is no issue. It's a requirement by the ICAN code. So you need to divulge information, not for your advantage, but for the work. For the work. You need to know why. You need to know the reasons for his leaving. What are the intricacies? What are the nitty-gritties and all that? So in answering your question succinctly, no. There's no challenge in that.
That's okay. That's okay.
Right.
Thank you so much.
Thank you for that good question. Very good question. Okay, so speaking to safeguards, I was saying that we need to consider issues of conflicts and provide safeguards. Safeguard means you anticipate challenges and you try not to be reactive. You try to be proactive. So where you sense or envisage challenges, you need to apply safeguards, consider risks or conflicts when taking on clients, notify the clients, put Chinese wall, speaking to information barrier, and consider also resigning from the onset if you know that this engagement is going to be problematic for you. So conflicts between competing clients, the duty of confidentiality, we need to assess if conflict affects judgment. So where you have challenges with the client and you have a duty to duty of confidentiality, you need to assess if conflict affects your judgment as an auditor, as a chartered accountant. So the safeguards include consider acceptance, manage clients separately where you have 1, 2, 3 of them, then disclose to clients appropriately and separately. Apply Chinese wall, ensure that this client does not have information of this one, no divulging information to each client differently or intermittently. Then have security of information. Then advise clients to also seek independent advice from maybe barristers, solicitors, or second opinions from their trusted firms. So these are areas where we could resolve conflicts or envisage and proactively put mitigants and safeguards in place when we are taking on new clients or existing or handling existing clients. This is very important because competing clients, like a firm may be handling 2 major banks, their audits. So they need to put appropriate safeguards in place. And especially when those 2 major banks are competing for the market. And they have to be very, very careful. Those firms have to be very careful in handling such information. Two major big banks could be a problem when the same maybe engaging partner or the same firm is handling their audits. So that's how to navigate around conflict of interest and ensure that the public interest is first before our personal interest. You see, both of them are PI, the same PI. But then we need to dethrone personal interest and enthrone public interest in our duties as professional and chartered accountants in the business space. This is very, very important. Okay, so we ran through Unit 3. If we don't have any questions, so we can rush so that we can be fast. Those are concepts that are generally known. We are aware of them. They are not pepperish, so we don't need to overflog them so that we can move to more complex chapters that are frequently tested in the main exam, which is our primary goal to pass the AAA paper. Okay, so I think this will be the final unit, if I'm not wrong. Corporate financial advice is Unit 4 under Chapter 3, speaking to the rules of professional conduct. So corporate financial advice, we'll be looking at just 2 units. We'll introduce the subject, then we'll move to advising clients involved in takeover bids or share issues. So just two sections, we should be done with this unit. So there are certain types of corporate financial services which might create such significant advocacy and self-review threat. So don't forget advocacy threat. We spoke about providing a position that is more than what we are supposed to provide for our client. Then self-review is doing the job of making and checking and reviewing yourself. Like I'll use the words of one of our candidates, reviewing yourself. So those threats during our work should not be taken on. When you have such significant threats, they should not be taken on. So audit firms are discouraged around promoting or dealing in underwriting of an audit client's shares. We are generally discouraged to do that. Dealing or underwriting of our client or audit firm's shares. This is key because you are practically trying to jeopardize your independence, and it could be catastrophic for audit firms. So it's important that we take note of this. It's a challenge where an audit firm promotes or deals with or underwriting a client's or an audit client's shares, especially maybe banks or a company that is involved in share distribution. We need to take note of that. Promoting an audit client's shares is totally frowned out. It's totally frowned at. So let's take note of that. Doing that could undermine our independence, and it could make us less objective. Very, very key. So let's take note of this. And you could ask, what does it mean to underwrite shares for a client? It speaks to taking up the shares, like marketing it, something like that, promoting or dealing in it directly. So it's generally frowned at, or recommending it for suitable subscribers. So it's generally frowned at. It compromises our integrity, and it's, like we said, 2 threats: self-review or self-interest, and also advocacy threats are the reasons why we shouldn't promote or engage in this. Also, another area where auditors are discouraged from providing corporate finance advice to an audit client, where the effectiveness of such advice is dependent on the particular accounting treatment or presentation in the financial statements being audited. So what does that mean? An audit firm you're auditing, the advice you provide and its effectiveness is dependent on what you are auditing. So we are generally frank. So just do the audit job. Corporate financial advice is secondary, but primarily you're supposed to audit the firm. So where you find issues and provision of that advice will only be effective if the books are good or audited well. So it's primarily you're supposed to just provide your opinion on the fairness and trueness of the financial statement. So any other corporate advice should be maybe secondary after the report has been issued, not during the job. So take note of that. Chartered accountants are discouraged from providing that advice that would depend on the financial statements report. So in other cases, safeguards such as making management decisions, an independent review of the audit and corporate advice work, and using individuals who are not members of the audit firm should be considered. Yeah, so these safeguards and others as provided and that comes to our judgment should be appropriately used to ensure that any issue around our independence or that would jeopardize it should be avoided very, very seriously. Okay, so that's a general introduction into financial advice for clients. So in advising clients involved in speaking to takeover bids or share issues, chartered accountants may be required to provide advice, but it's advisable to do that as a separate job, not during statutory audits. So advising clients could be taking out a job, but it should be a non-audit service. So auditors are also asked to give advice. In fact, most auditors are advisors, like internal auditors. Currently, we are being looked at globally as strategic advisors. Yeah. So, however, external auditors too provide advice. However, where clients are involved in the contest of taking over maybe another company, mergers, acquisitions, the auditors or we auditors should find ourselves in a position where we are acting for both parties. And where we find ourselves in such situations, it could be bad if we're even in a statutory audit engagement. But where it's a non-audit engagement, well, it's a bit safer. So in this situation, there is a danger that the firm cannot give objective professional advice in the best interest of both parties, where two parties, the merger and the mergee, let me use that word, or the acquirer and the acquiree are involved. So a possible lack of independence may ensue. So that danger, accountants should envisage it and stay clear of it, where you have two clients and objectively advising both of them will be practically impossible. So you can't be objective when the interest of both the parties are at stake. So in such situations, chartered auditors should be careful, very careful. And the firm, another situation is where the firm may be in the possession of confidential information relating to those two parties that want to be in the merger or in the acquisition, with a risk that the information may become inadvertently available to the other party. So diverging information to one for the advantage of another, it's not advisable for chartered accountants. So in navigating such complex dilemmas, we have to be very careful in such situations. So where a possible breach of confidentiality or guidelines in this area are provided and where there is no reason in principle why firms should not act for both parties when a context takeover bid occurs should ensue. So a firm should not be able to be the sole or main advisor of both firms. Chartered accountants or audit firms should not advise both firms involved in a takeover or a merger. So you could be employed by one firm, not the two firms. That's standing in the middle, and playing like the devil's advocate is very dangerous for chartered accountants to do that. So if accountants are in the possession of material confidential information and feel that their position in respect is questionable, they should take advice from appropriate financial regulatory authority in such situations, professional situations. So there are regulatory authorities, CAC, SEC, if it's a bank, CBN, you have FRCN. So most firms should reach out if you have doubts in areas or how to navigate such spaces. So, for example, the stock exchange involved in the takeover or the national regulator of the financial market. Yes, like I said, the NSE, SEC, Nigerian Stock Exchange could be reached out to clarify on some of these issues. So similar conflicts of interest may arise in connection with issues of shares to the public, because the accountants may be advising both the company issuing the shares and also potential investors in those shares. So such companies interested in buying an investment in the shares or investment institutions, chartered accountants have to be careful in navigating these two clients. You have to be careful, because in doing that, you may be jeopardizing your independence. So we have to be very careful and extremely careful, so that one party's interest is not above another. This is very, very important. Okay, so that speaks to the end of advising clients involved in takeover bids or share issues. All right, so if we don't have any question, we just run through that. We'll just review the chapter. I think it's a good way to land and ensure that we rush into question and answer practically. The chapter is not frequently tested, but then it's good we prepare. We shouldn't isolate any chapter from the study text. But we need to concentrate on high yield areas. We'll come to chapter 6, chapter 5, all the high yield areas. We need to concentrate on those places where questions are coming very, very significantly. Yes. So let's review the chapter now. Chapter 3 speaks to reinforcing the importance of the 5 fundamental principles. Of course, we've seen that. Then also the need for independence in mind and appearance. We've seen that. Also, we looked at the threats to independence and how to safeguard against them. And also covered briefly today the duty of confidentiality and where we have exceptions, and areas of conflict of interest, and how to safeguard, and also speaking to corporate financial advice and how not to be in a fix, and how to get also advice where we are stuck. So we need to be careful and remember to understand the why. Please take note, because most of the questions that will be coming speaks to case studies. So we need to understand the why behind most of these rules, not just the what. We need to apply these principles to real world scenarios, because most of the questions that will be coming will not be direct or knowledge recall. They may be application based. So please remember to understand the why behind these rules. Why these rules? Not what are the rules. Why the rules, and how do we apply them in world scenarios or case studies as provided to us. All right. So that's a good wrap up of chapter 3. And we'll be running to our question and answer session very quickly. So any questions?